In this video, I will discuss on types of equity mutual funds for investment. Passive and active mutual funds, diversified equity funds based on market capitalization, based on sectors and industries, based on themes, based on investment styles, equity-linked savings schemes. 1. Passive and active mutual funds. Passive funds will invest your money in the company which is part of an index like Nifty or Sensex in the same prosopon as the company's representation in the index. In other hand, active funds select stocks for the portfolio based on the strategy that is categorized based on the way the securities for the portfolio are selected. 2. Diversified equity funds. This fund invests across segments, sectors, and sizes of companies. 3. Based on market capitalization. Large cap fund invests in stocks of large, liquid blue-chip companies with stable performance and returns. Mid-cap funds invest in mid-cap companies which has the potential for faster growth and higher return. Small-cap funds invest in companies with small market capitalization with the intent of the benefit of higher gain in the price of stocks. But the risk is also higher in these types of funds. 4. Based on sectors and industries. These funds will invest in companies that belong to a particular sector such as financial, technology, healthcare, FMCG, energy, services, chemicals, automobile, communication, construction, durable, metals, etc. These funds are riskier because of lesser diversification. These funds are concentrated in a particular sector. The trend of a return to be cyclical, and the return from investing in a sector is never the same across time. 5. Based on themes. Theme-based funds invest in multiple sectors and stocks that form part of a theme, like consumption, construction, banking, etc. 6. Based on investment styles, growth, value funds, and dividend yield. 7. Equity-linked savings schemes, ELSS. ELSS is a special type of equity fund investment that gives the investor tax deduction benefit under Section 80C of the Income Tax Act.